Hi and welcome to another edition of TraderCast Daily Market Report. We're looking at euro dollar in multiple timeframes. Our daily chart appears to be in a clearly defined downtrend, as well as our 4-hourly, hourly and 15 minutes. So they're all pointing to fairly embedded bearishness and clearly embedded downtrend. What happened overnight there was that a certain amount of stop losses were triggered below the psychologically important 120 area in Asian session, and euro dollar opened lower. Mainly driven by fears with the Greece, but then obviously helped with ECB comments about potential QE and stronger dollar. So we created a bit of a gap, but the 120 area is definitely a point of reference. So our 4-hourly time frame appears to be pointing to the same level, 120, although we flushed lower down to about 1870, 1868, depending if you're watching your data from Bloomberg or Reuters or maybe derivative trading platforms. They all have a slightly different intraday lows, but it doesn't change the fact that euro appears to be very significantly oversold at the moment, but in a clearly defined downtrend. So we are currently in hourly time frame at 119.33. We settled at that level after reaching 118.87, 118.70 area. So in hourly time frame, obviously previous lows at 119 would be a point of reference, and then 118.70, but above us we have yet again this 120 area. 15-minute time frame is pointing to the same level, even with more significant 200 period moving average around the same gap that we were talking about as well. And the current price action appears to be a coiling or consolidation price pattern. So let's go into our charts and see if we can identify some levels. In a very basic kind of term, we are seeing that the current close is well below that 120. So 120 would be logical upside resistance. So rally into that zone and a gap fill could probably offer bearish traders with a logical opportunity and a level to trade. In that case, stop losses should probably be placed around 120.50. A breakout above 120.50 could very easily target 21.20. Overall bearish above this 200 period moving average in 4-hourly, and even before that we have 122.20 as a logical upside resistance area as well. Alternatively, if we sell off from the current lows, or if we lose the current lows, then apart from 119, which is logical and a round number, we can potentially be looking for further downside support towards 118.70, 1870. A loss of that level could very quickly target 117.96. 1796.